All right, so yeah, just officially good morning to everybody. I'm gonna just take the rule just to make sure I know who here as of right now. That's up and running. Right, okay, cool. So not seen earlier. There's Elijah. All right, cool. Okay, morning Elijah. How you doing? All right, so Cassidy here, Elijah here, Julia, Jonica, Joshua Springer, Keisha is here. Oh, there's Ariana. None of the E's coming today, boy. Morning, Ariana. How are you today? Good to have you on. Yeah, I cool, girl. I cool. Have a packed day, but fortunate to have that. Yeah. So the other potential hazard this morning was that the babysitter canceled on us around 8 o'clock, or a little before 8. But luckily my parents were able to fill in because they had plans and then the plans got changed. So yeah. Anyhow, sorry, where was I? Okay. Liana is here. Michaeli will come. Naomi is here. Sarah is here. Tony is here. Right. So there's a few people who normally here who are not here right now. Give them a few minutes. Okay, cool. Right. So folks, let me just address a little bit of a timetabling issue. What's going on here? Okay. Do I have that open across here? No, I don't. What's going on with that? Anyhow, all right. All right, folks, we are in April. I think you'll probably know that. All right. Oh, wait, things were frozen. Okay, cool. Okay, so let me just say quickly so we can get to the work, right? So we are here on the 5th of April, right? Now, the term ends next week, Friday, right? So normally I don't have class the day after the term ends, but I think you all could agree we kind of close to exams, right? So I'm also considering possibly having you all during the week here, Tuesdays and Thursdays 4 to 6. But watching that during the Easter break, I actually want to put you guys on those days and times, Tuesday and Thursday 4 to 6 on the 15th, 17th, 22nd, and 24th, right? I'm trying to keep my weekends free because, as you can see, I have a CSEC PAWay crash course. So my day is going to be kind of packed. So I kind of taking the Easter weekend off, at least from class, and I'll have other stuff to do. And then the weekend before school start, well, when I say, I know school not really starting back for most people. The term will restart because I have a next crash course plan here. But problem is, I don't know that I want to do this particular one because, and I'll show you why. We have a clash on this Friday here, which is the CSEC maths with y'all, right? And as you can see, I kind of pack up maths here. And as you can see, I didn't put y'all there. I don't like the idea of leaving y'all kind of high and dry, running right up to the exam. I don't like that idea. Right? Let me sit in Shekinah here. Hey Shekinah, good morning. How you doing? Good to have you on. All right. We're just discussing a little scheduling matters, right? Now for April, right? If we have class today. Yeah, morning, Shekinah. Yeah, today and next week, right? That's 2 days. And then if we have it, the 4 days, that's 6, right? Now with the budgeting, based on a plan from last year, I have one more day of budgeting to go, which is next week. And then we have 2 topics to cover. 2 topics are, sorry, one sec, right? Standard costing and variance analysis. Yeah, and then capital budgeting, right? Now with standard costing and variance analysis, right? How many days did I do there? I did 1, 2, 3, 4 days. Oh, that's in 2022, right? Did I not do it last year? I'm pretty sure I would have. Okay. Well, I have 4 days there. So I have that, then overhead, then apparently a recap, but that's the same date. Oh, no, that was a recap of day 1, right? Then all variances, some passive and more passive progression. Here's a link. All right. Hey, morning, Aaliyah. How you doing? Good to have you on. Yeah, we're just discussing some logistics for the next couple. Let me just say, hey, Shaq, how you doing? All right, glad to hear that, man. Yeah, trying to discuss how we're going to complete the syllabus because we have a little bit of a clash in May, right? So variances is 4 days. Oh, sorry, I pressed And then capital budgeting, also called investment appraisal. That one I think is about 4 days too. Sorry, I didn't mean to open this file here. Yeah, well, I kind of compressed this to 3 days, right? So here's the thing. I don't just want to give you a replays to watch and then call that. You're in the Shekinah too? Okay, cool. So I have a Shekinah online here and there. All right. Yeah. So like I was saying, we have class this week, most likely next week, Saturday as well. All right. And then during the Easter break, I would like to have class Tuesday and Thursday, 4 to 6. On both weeks. I'll send a poll in the chat and you'll let me know if you could make that, if you can't make that. If the majority can't make, we'll see how best we could rearrange, right? I do have a 6:30 to 8:30 slot available, but I would prefer not to, I prefer to end my days a little earlier because as you could see, I'm having some long days going on here. And back before I had 2 kids, well, yeah, that was a small thing. Now, it's not as easy, right? Yeah, so as you can see, we could get 4 more sessions in April. So technically speaking, we could knock out variance analysis. But then when the term starts, right, as you can see, like I was saying, I don't know how to straddle this here because I see in Caribbean studies is on the Tuesday, comm is on the Thursday, which means some of y'all not going to be here. Even if I was to schedule some stuff, some of y'all wouldn't be able to make it the Wednesday to study for and then you probably might be able to make it Thursday evening to study for, Thursday evening to study for Friday, right? Let me just, the video come on and how you doing? I saw your message. I was discussing something, so I didn't respond. Sorry about that. We're good to have you on. No problem. Yeah, so I just discussing that after today, we have one more day of budgets next week, Saturday. Then I'm trying to put you all for Tuesdays and Thursdays for the next 2 weeks, as is during the Easter, Tuesday and Thursday, 4 to 6. That will cover variance, but then after that, I don't have any space at any days and times. The one thing is this is a redundant POA crash course thing. So what I was thinking is I could take that out, right? And I could potentially put you all there, right? The problem is I could do a max of 6. Actually, my max is supposed to be 5 days while the fees remain unchanged. But over the past couple of years, I've stretched it to 6 days and leaving the fees the same. If I put more days in April, the fee is going to have to go up for that month, right? And also in May, if we do like 6 to 8 sessions, well, the fee had to go up, right? Again, I'd like to not have that happen, so I'll see how best I could straddle that. But hey, Timmy, what's going on? Yeah. So I could. So what I was thinking was maybe to advertise what you call it, a keep accounting unit 2 crash course for that this week here, because I clearly can't do it here because I've been doing maths with the maths kids, and like I said, with the Caribbean studies, I know some of y'all not going to come on the Monday. With the comms, some of y'all not going to come on the Wednesday. But the Thursday evening, I mean, I would like to have y'all, you know. So let me see how best I could deal with that. But yeah, so I'm gonna send a poll in the chat to see if you guys could make the Tuesday and Thursday in the Easter break, right? Timmy, yes, I do. Yeah, and I'll also ask y'all if you'll have any recommendations for how best to fit in whatever we didn't get to do during the Easter, because I'm leaning actually more towards covering the investment appraisal because I has less time and we could sneak in a day of variances. So technically speaking, you could finish investment appraisal and get piece of variances, right? So that way, other than that, you will just have to do variances alone and no investment appraisal. And I don't like that particular option, but I don't like the option of leaving anything out, right? So anyhow, enough of that. We need to get to today's work so that way we can make sure we finish what we had to finish, right? So again, you don't have to give me an answer right now. Of course, if anybody has any recommendations or suggestions, I'm open, all right? Anyhow, right, what? All right, folks, today we are going to be, for maths. Yeah, for maths. Yeah, so we're going to be diving into the cash budget today. All right, so watching my notes from last year. 1, 2, 3, 4, 5. Binging Cavalcade, seeing Fillmore there. Cool. All right. So folks, let me zoom in here so we could start talking about stuff like that. So last week we took a look at the schedule of cash collections. Did I miss? Is something missing from there? Okay, there you go. Right. All right, so budgeted monthly income statement for October 2016 to Jan 2017. So October, November, December, and then January the following year. Okay, so we have sales, cost of sales for those 4 months, gross margin. Gross margin is gross profit, right? Less OPEX, so we have variable overhead, fixed overhead. Oh, sorry, somebody's... Hello, good morning. Ah, yes, how can I help? I am, yeah. She's worked for us for, how long is that? What, 8 months now? Guys, sorry, I had to take a call. I couldn't talk about on screen. Sorry about that. Okay, so let's get back to it. My apologies. Right, total expense. So see, we add in these two things to get the 75, add in these to get 101, add in these to get 64. Okay, cool. And then the net income is the gross margin minus the total expense, right? So this is kind of like what a single column income statement would look like, just in a very compressed format. And as you can see, what they do is they put these kind of borders, these kind of lines around the subtotals. And you have, well, again, when you are exposed to it and you have experience, you'll know that, hey, these things here are what I will add or subtract or whatever the case is, right? Normally, when we have those kind of statements, we have different columns and we'll shift subtotals across to certain places to facilitate the subtraction and that kind of the arithmetic, all right? So 112,5, 75, 375, you subtract. So we have net income here, and 160 is 750 minus 101, you have 67, 750, and so on. This minus that is 29, 75 minus 57 is 17, all right? Okay, so we have those things there. Now it says fixed overhead includes depreciation of 12,500 each month. Okay, now depreciation, as we know, is a non-cash expense. What does that mean? It means that there's no money paid out in respect of depreciation. So this fixed overhead here, right, if we had to convert to a cash basis, we'd actually have to, well, we could do it in one of two ways. We could take 12,500 away from each of these 26s here to get the actual cash figures, or we could just add back the 12,500 to the net income, all right? Because again, if this is an expense it's taken out, which will cause, sorry, if this expense is included, if the 12,500 is included here, and that will feed into here, and you subtract this from that, you get the 37, right? But if you exclude the 12,500, it means that this is going to go down, this total is going to go down as well, and you have a lower expense figure. So you're subtracting less from your gross margin. And if you subtract less from your gross margin, your net income will go up. All right, now the company has a loan to repay of 30,625 in November, okay? Furniture costing 10,000 was purchased in August and should be paid for 2 months after purchase. Okay, so that kind of harkens back to last week where we had purchases and then the timing of the payments in different months, right? So here it's just been, so we're buying it in August and we're paying for it 2 months after. August to September, September to October. So we have 2 months, sorry, we have October in which we're going to be paying that 10,000. Cash balance at the start, sorry, at the end of September is 65. So the balance at the end of September is the balance at the start of October, okay? And variable overhead and fixed overhead incurred are paid for during the month in which they are incurred, right? So the variable overhead, fixed overhead. So we're talking about stuff like electricity, maybe internet, any other kind of source of power, maybe indirect workers, indirect materials, that kind of stuff, right? So those things are paid for in the month in which they are incurred. So there's no credit allowed for that. So there's no timing difference in terms of when it's incurred and when it's paid, right? Maybe at the end of the month, but in the same month, right? So if you incur it in October, we're paying for it in October. If you incur it in November, we're paying for it in November. Sorry, I keep getting this message here and I don't understand why. Uploading this to the NAS. Is it that I'm on the wrong network? It's on, right? Da da da. Okay, cool. If it happens again, maybe I could close it off. Yeah, let's close it off and see what happens. I could always open back. Right. Now, what do they want us to do? Now, they want us to do a cash budget, right? So a cash budget will need to explain the inflows of cash, the sources of cash, the outflows or uses of cash, and you will also have to have in the mix the balance, the opening and closing balance, right? Now, there are different layouts or formats you can use for this. I'll show you the one I'm accustomed to. If you're already accustomed to one from school or you have one you know from somewhere else and you're accustomed to that, it's perfectly fine, all right? Because again, we're doing cost accounting, management accounting. There are no reporting standards governing the presentation of these things. It's logic-based, it's math-based, right? Inflows, outflows, and you put things in ways that they can be easily interpreted and understood. Right, okay, cool. So, let me actually, can I split the screen here, boy? Right, so Wilson. All right, so we start off with the inflows, right? So with the inflows, right? So we have sales. So sales is the money coming in, right? So we have 375, all that stuff. Now, what are they telling us about sales? They didn't give us any information about that. Hold on one second. I have the information. Balance, right? Furniture, loan to repay. Okay, hold on just now. One second. A little calculation to make a progress. All right, hold on. Wait, hold on. This is Wilson, right? Okay, hold on. We had Wilson last week. Okay, cool. Wilson. Let's put Wilson on top. Okay, cool. So sorry, I forgot. I had to pull from question from last week. Okay, so by the way, the cash budget is a budget that is fed by other budgets. I might have mentioned this last week, but I might not have given like a written paragraph or whatever, right? So the cash budget will need the schedule of cash collections to be done. It'll also need the schedule of sorry, one sec. Right, the cash disbursements to be done as well, right? Oh, and thanks to Cassidy pointed out a little mistake I made in one of the questions. I think it was one of 50 cents. Was it Wilson? One of them. Okay, we'll come back to that. Anyhow, so schedule of cash collections. Right, okay, cool. So we have these figures that we're dealing with here. All right, so what we do is after you do your cash collections, right, you put in stuff here, right? So we have the cash collected from. Okay, so we have 264,750 in November. Sorry, in October. In November we have 385,625. In December we have 445,625. All right. Now, some people like to put that as the total. I like to show my total separate, even if it's only one line item, right? So this here is my total cash inflows, right? Now, again, you don't have to use capital letters. You don't have to use bolding or highlighting. I'm just doing that for visual appearance's sake, right? To kind of point things out to you a little more easily. Okay, now that's the only inflow. So the outflows now, let's take a look at the outflow. So we'll need this item here, which is the cash disbursed, right? But let's see what else we have, right? Oops, did I do something wrong? Oh, right, I did maximize this. Okay, cool. So now we have the outflows. Now some people like to call this receipts and payments. I don't prefer that, but they mean basically the same thing. So it's just a matter of preference. It's not anything set in stone. All right. Okay. So like I said, the first thing we're going to talk about is the disbursements for purchases. Where did I put that? Right. Okay. So disbursements for purchases. So you can put payments to suppliers. All right. So what we're going to do, we're going to round off. All right. Yeah. So 259, 289, 339, 336. And 268, 789. Right. Okay. Now, it's your choice whether you want to show these with some kind of indicator that they are outflows or not, right? It's really up to you. There's no set standard. There's no standard rule. It's really up to you how to present. Okay, cool. Right. Now, I think I'm okay with that. So I will now need to go back here. Let's actually pull this down a little bit. This up and we will pull this down. Right. Okay, cool. So the payment. So if we go, let's zoom in a little bit more. Right. So if you look at the operating expense, we have variable overhead and fixed overhead. All right. Now there's no specific sequence in which you have to list these. So let's go with variable overhead. Right. Oh, sorry. Hey, morning, Haley. How you doing? Good to have you on today. We're doing a cash budget, and it actually was pulling from work that we did last week, which was the schedule of cash collections and then schedule of cash disbursements for purchases, right? So we are doing for Wilson, right? So variable overhead. Now it says here that variable and fixed are paid for in the month during the month in which they are incurred, and there's no other item to adjust variable overhead. So put in the easy ones first, right? So 49, 370, sorry, 375. Right? And then we have 75,000. We have 38,750. Variables. Overhead. All right, now it says here fixed overhead includes depreciation of 12,500 for each month, right? So the fixed overhead figures, right? Those are for things like we said, for expenses that do not vary with the level of output. So, for example, maybe rent or insurance, that kind of stuff, right? Depreciation is also a fixed overhead, but as we said before, it's non-cash in nature. There's no cash flow attached to depreciation, right? So what we do is, again, we have to adjust these figures downwards, right? Hey, Peter, happy morning. How you doing? So what we'll do is we'll show, right? So less depreciation of 500. Okay, cool. So we're gonna do 26,000 or just finish. Okay, cool. So yeah, I was right. Right. So it was the same figures, right? So you minus the 12,500 in each case there. Nice. Okay, now we have to consult the additional info. So fixed overhead, right? So a loan to repay, a loan to repay in November. Okay, cool. So loan repayment. So it was October, November, December. So November is the middle month, right? So 0, and the repayment is 30625, and then nothing for that in December. Furniture costing 10,000 was purchased in August, should be paid for 2 months after purchase. Okay, so payment for furniture. Right, so after August, 2 months after August is September, October, so it's paid for 2 months, not in 2 months, or over the course of 2 months. It's paid for 2 months after. So you're not paying anything in August, you're not paying anything in September, you're just paying for it in October. All right, so nothing here. Then we have how much? 10,000. Wait, sorry, that's the wrong month. That's November. Wow, okay, my bad. I keep thinking this is September for some reason. So October, November, December. All right, cool. Okay, let's take a look at anything else. Cash balance. Okay, so done that. So it was this, that's that. Okay, so those are all of the outflows we have there. So let's total them up. And we put it as total outflows. All right, we don't actually need the word cash. You can just put total outflows. Okay. So now we have total inflows here, total outflows here. So what we could do is we could assess what the net outflow is. All right. How we do that is simply, well, we find the difference, right? So the net cash outflow. Right, so clearly we only got 264 in and we spent 332. So we clearly spent more than we got in, right? Same thing in November. December was the only month we made more than we had more coming in than going out. All right, so the net flows, right? So net cash flow or outflow, right? Sorry. Actually, don't need that to be in bold. Anyway, I'll leave it so for now. Right. So we're almost done here. There's only one more thing to include, right? But before I go to that last piece, actually, let me just do the last piece and then I'll take questions after. So yeah, I know I kind of didn't follow my usual protocol about taking questions as we go along. Yeah, I kind of got lost in the explanation for a little bit. Sorry about that. Okay, so now we can include the balance at start now, right? So the balance at start, right? So at the end of September, it was 65, which means at the start of October, it was 65, right? So this is the balance at start, 5,000, right? So if your net cash outflow is that, and this is how much money you had at start, what's going to happen is you are going to have a cash surplus or deficit at end, right? So the surplus is not with brackets, deficit is with brackets, right? Now this balance, now you could also call it balance at end, right? Actually, it might be easier to call it that. Yeah, because then you remember that the balance at the end of 1 month becomes the balance at the start of the next month, right? And now when we have a deficit of 2,400 to start, and then we have a net outflow of 72. So now we have an even bigger deficit at the end, 75. Thankfully, in December, we got in 445. We only spent 321. So we have a net inflow of 124. So what's going to happen there is when you bring your balance at the end of November to the start of December, and you add or subtract, right? We end up with a positive balance. Oh, no, hold on. I don't want them to add. I don't want them. Right, that's what I want. Okay, I'll do that. Yeah. And that is your cash budget, right? So your cash budget has some sections. You have your inflow section. Usually this is fed from your schedule of cash collections, right? If the question gives you more inflows, it's supposed to tell you. We inspected the information in the question. They didn't give us any other inflows besides sales. Well, the cash collected from customers, right? And then, of course, for the outflows, we had a few, right? This came from the disbursement schedule from the previous week. right? Variable overhead. That came straight from above. The fixed overhead had the adjustment for depreciation. They like that one. And then we had these two one-off things, right? So some things will not be in the income statement they might give you. All right. Now, in this case, they were kind enough to give you an income statement. Sometimes they just give you, so like how you have this additional information here, right? Now, it's not likely to happen. It used to happen more like way back in the day. They would just give you like bullet points, right? And you would have to piece things together from that, right? So the truth is, I mean, things could start off there like in practice, but more likely than not, you're gonna have some schedules that you could pull from already, right? But of course, we want to train you all to be able to prepare those schedules because not everything right now is automated. The way AI going, it might be sooner than you think. Anyhow, so you have your inflows, you have your outflows, and we compare total inflows to total outflows. The difference between them, and again, you don't have to put any of these in brackets. That's just my preference, right? You could leave all of them without brackets. And once you know you're doing inflows minus outflows, and that'll give you a net cash inflow or outflow. Actually, I'll put brackets around that. Yeah, because we need to know, right? So to me, the brackets act for me as a visual cue of whether I have a a negative or a positive figure, right? Negative being net outflow, positive being net inflow. And of course, my balance of start goes here, right? Now, to me, this is the more compact form in which to put it. The other form is where you actually put your balance at start on top the inflows. You add the balance to the total cash inflows, to put total cash available. And then when you minus the net cash, the total cash outflow, then you get your balance at end, right? So it's not much different, but I think this one is a bit more compact and a bit more efficient, all right? Okay, right. So as you saw, to be able to do, hold on, this thing, give me the same thing again. Next computer somewhere. Anyhow, yeah, right. So to be able to do this, you need to have input information. You need to have a schedule of cash collections, which we did last week. You need to have a schedule of disbursements for purchases, which will then be fed by your production or purchases budget, right? So your cash budget is kind of like a, oh gosh, what is escaping me? It's the kind of, I don't want to say summary per se, but it's one of the last things you're going to be doing in terms of the budgeting process, right? Because it's fed from all those other things. All right. Right. So after you have all of your outflows, you total them, compare that to your total inflows. You have your net inflow, outflow, add your opening balance, get your closing balance. And the closing balance at the end of 1 month becomes the opening balance at the start of the next month. Okay, cool. All right. So, ladies and gents, if you guys are good with that, just kindly give me a quick Genie chat. If you need me to re-explain anything, everything, that's not a problem. Just give me a R, and we will. And well, let me know what it is you want me to explain or re-explain. Okay. Timmy, give me a second, right? Oh, well, yeah. 12 out of about 15. Okay. Security. All right. All right. So, ladies and gents, we did Cavalcade. Sorry. Yeah. We did some stuff on Cavalcade last week, right? So for Cavalcade, right, so what I'm gonna do, let me send this information to you, right, from Cavalcade. Really the last two lines, the last line in each particular thing you're gonna need, right? At the work. Okay, cool. Take him all right in morning. All right. So I'm sending you all that image, which has the cash collected and cash disbursed for Cavalcade. I'm also sending you this particular piece here. Right, and what we are interested in here is, again, that very, very last line. Right, so we're using some information from last week to help us answer the question for Cavalcade now. All right, okay, cool. So I sent you that stuff. So what I want to send you now, right? Hold on. Okay, so forget that. All right, so what I want you to do for me now is I want you to do the cash budget for Cavalcade, but there's one other piece of information that you need. This piece right here, right? The company proposes to make an additional investment in equipment of 22,005 in March. So I'm going to send just that piece. Give me 1 second. Let me crop it out. All right. So again, what I want you to do for Cavalcade is basically what we did for Wilson. You're going to head up inflows, cash collected from customers, and that's the only inflow you have. Then you're going to do outflows, right? Now there are two sets of outflows for Cavalcade, right? So for Cavalcade, you're going to have, sorry, let me zoom in a little bit more here. Right, yeah. So for Cavalcade, you're going to have the total cash disbursed for purchases. You're also going to have the total disbursements for expenses, and you're going to have also on that piece there, the where did it go? Sorry, my bad. Yeah, you're also going to have an extra. So the one-off items. So remember, like across here, we had a one-off item for loan repayment and payment for furniture, right? So in Cavalcade, you're going to have a one-off item of equipment purchase in this is for in March for 22.5, right? So you're doing the cash budget for Cavalcade, right, for January, February, and March, right? So you're going to start with the inflows. Okay. So let me see if I could actually just. All right. Let's put that to the top there. Put that one too. Down here now. Okay, I'm gonna zoom in here a little bit more. Oops, a little too much then. Right. So you have your inflows, you have your outflows. Oh, hold on. Right. Okay. Cool. So I think we could see everything we need to see there. Right. So these are your inflows. This is the first outflow here, second outflow here, and then the one-off thing in March. So let's see what we can put together for that. else. They're already there. You can take a look at my channel and check out the lives. If anybody's not sure what to do, let me know. Send my heel. Hey Chris, I don't know what to do. If there was a specific question about a specific item, that's fine too. All right. Okay, so once again, let's take let's do the first thing. Right, so the cash budget again shows the inflows and outflows, and of course, opening and closing balances of cash for an entity. Right, so no more head blocking a little piece down there, but we'll scroll up when the time comes. So hoping that's not too small. If it is, let me know. Right, so for the inflows, there's only one set of inflows here, which is the cash collected from receivables. All right. So, whoops, sorry. Right now, if you're worried about like what to call it, that kind of stuff, you could just put total cash collected for the month, total cash collected from customers, total receivables collected, anything along those lines, right? Right, so we have 112, we have 249, 760, and then 311, 520. Right, so that's total inflows. Outflows now. What I'll do is I'll just head up the line items as in the sections you're supposed to have, and I'll give you a few minutes to finish off if you haven't done so yet, right? Right, so like I said, in this question, we only had a couple things. We had total cash disbursed for purchases, we had total disbursements for expenses, and we had a one-off item here for the purchase of machinery in March, right? And don't forget, we're doing it for January, February, and March, right? So we had total disbursements for purchases, right? So that's 66,600. So I'm pulling from top right hand side here, right? We had 150,600, and then 196,800. Right. Sorry, I wasn't supposed to fill that in. My bad. All right. We also have total disbursements for expenses. For expenses. Right. And then we also have purchase of machinery. Right, which is in March. So you have a zero here, zero here. Total it up. And then total outflows. People just say unit 2 is not unit 1. That's a big lie. It depends on your predispositions. Right? If it is, you just think accounts is like formats to memorize and that kind of stuff, it could be easier because some teachers give good formats and explanations. But if it is like, for example, you're accustomed to income statements and that kind of stuff, and you're not facilitating and making the little transition to thinking a bit more, then I understand why you could say it's hard. But everything hard till you know how to do it. Very good. IA exam. There are no more IA exams. The new syllabus took them out. No, they have no more of that. The new syllabus, which started last year, yeah, you're supposed to do, yeah, it started very recently, yeah. And I would prefer module exams than IAs or SBAs. I think IAs and SBAs are tremendous waste of time, resources. I think module exam should be the correct thing. But on top of that, I don't even think those should happen. I think you should just sit the exam. I agree. Yeah. Right. So let's put in here. So total disbursements for expenses. So we have 64,500, right? 77,100 and 105,788. Head blocking it? Yeah. Okay. Right. And then the item here was the minus 22,500. Right. And now we add those together. I get those figures there. Right. So 131, 227, 7, 3. Okay. This is the wrong figure. Hold on. Just now. 150, right? 196.83. Where does this come from then? Oh, I double counted it. Okay. So okay, forget it. Right. So you see, look, yeah, we put it across here. Oh, okay. All right. Take that out. Okay. Sorry. My bad. Didn't read properly. Okay. Right. Sorry. Yeah, I put it here. But this was supposed to be just what? Expenses. Yeah, okay, this shouldn't have been here, to be honest. All right, anyhow, it's done there, so we'll just put that there. We'll take this out. Or can we separate it, boy? We could, you know. Yeah, students, teacher. Yeah, that's happened sometimes. Quite often. Right, okay, cool. So we'll leave it like that for now. We'll take it out. Hold on, this is a cash budget. Yeah, you know what? Okay, so cool. Let's take it out on this side. So 83 to 88. 83 to 88. And then minus 24. Right. Okay. Cool. Right. So this is what it should look like so far. And of course, we have to do net cash inflow or outflow. 19.1, 22.06. Right. So there's one month where there's a net outflow. Is this Excel? Microsoft Excel? Yes, it's Microsoft Excel. That's correct. Oh, I found the 2023 exam paper. I can't remember. That was 2 years ago. All right. Right. Then we have to balance at start and balance at end. Did I give you guys the balance at start? Sorry if I did not. All right. 1 second. $14 is 14,000. I know it's 14,000. It's not sure where that information is. Okay. Yeah. So the balance at start is 14,000. I know I didn't give it to you. I do apologize for that. So it should be 14,000 here. Right. So yeah. So if you didn't have that, you could fill it in now. Sorry. And just finish up the rest, and then we'll do a question from scratch. I think maybe doing it from scratch will help us to have all the information on hand. Yeah. Sorry. Yeah. A little off today. Past few nights with the kids have been a little rough. So I've been up since like 4 o'clock. Past few mornings. This morning was 5, but on top of that is broken sleep. So I'm not like, it's not like I'm sleeping straight from like 10 or 11 to 4 or 5. That'll happen. So yeah, some days a little more difficult than others, but gotta try. And yeah, thankfully we have 25 mark budgets question. You be smiling. Well, some people like budgets, yeah. People don't. I like capital budgeting question. I like budgets. I like CVP. Variances, I don't mind. They're not my favorite, but I don't mind them. And module 2, boy, module 2, I love absorption costing, process costing 2, job costing and ABC, okay. Service sector costing, okay. Module 1, well, manufacturing is kind of a little too easy, depending on how you prep for it. I find it's a waste of time to have stock valuation in the syllabus, to be honest. I also do see the point of the what you call it, the disposal of hazardous materials. I do see the point of that in the syllabus, to be honest. There's no accounting for it. So what's the point? Decision making accounting. And then my least favorite is the overhead stuff, but I kind of like it a little bit more now because of the simultaneous equations. Yeah. Module 2 is pretty good. All right, cool. So we're going to add here. Oh, sorry, my bad. Right, so we have a net negative balance there. So then we have this one here. I had the doorbell. As in, like, someone to come on the chat. No? Okay, cool. Right, okay. Same thing here. So we have a net positive inflow, right, to cancel off the balance, the deficit coming in. And then we end up with a yeah. Okay. All right. Okay, folks. All right. So yeah, okay. I admit it was a little rough in terms of the the information and forgetting a couple of things. But in this next question, like, you're gonna have information given to you, so hopefully it should go a little smoother. But Google Meet, if you guys are good with the solution currently on the screen, just kindly give me a quick G in the chat. If you need me to react to anything, I understand, and I will definitely do it if you need me to, right? Props. Yeah. So only 4 out of 15 you'll see. Next 11, when it's more than 10, when it's 10 or more, something went wrong somewhere. So anybody want to say anything? Or you just want to go to the next question? That one we work on one piece by piece. That one we have a cash collections first, then we have a disbursements thing, and then we have full cash budget at the end. So that should probably carry us to the top of the hour, to be honest. Each of those pieces, the first couple of pieces, like 10 minutes each. No, we have a purchases budget, right? So 10, 10, 10. So that's half an hour, right? So that's, and then the last piece is the 20 minutes. Okay, okay, yeah. So yeah, we gotta start. So the first piece that we're doing is a bit of a throwback to last week, right? So the management accountant of Fillmore Incorporated has provided you with the following information pertaining to the company. So we have monthly sales, November and December 2010, actual. And then we have forecasted for January, February, and March 2011, right? These figures here. Sorry. Yeah. Cash collection pattern: 30% in the month, 30% in the month of the sale, 50% in the next month, 80% the following month, and then 2% uncollected. All right, cool. So this is like something we met last week, so it's nothing too foreign. So they want you to do a schedule of cash collections for the above. So right, so I will also have you try that now. Right now, again, November and December aren't really supposed to be there. I'm just including them because I will pull from them in my work in Excel. All right. Right. But when you are doing your presentation, you're really supposed to only show January, February, and March. Right. Because remember the collection pattern, right? So for example, let's talk about January. January sales of 175. You're going to collect 30% in January, 50% in the next month, February, and then 18% in March. But what that also means is that in any given month, you're collecting for 3 different months. You're collecting 30% for the current month, 50% for the previous month, and then 18% for the month before that. Right? So January will have collections for January, December, November. February will have for February, January, and December. And March will have for March, February, and January. for a couple of minutes again. Let me just zoom out a little bit here. Head up, right? So sales. Oops. Nope, no, that's 150. No, stages, sorry. All right, I'm gonna start with. Now again, you guys can do this in any particular pattern, any particular way you want. When I say, so some people like to go month by month, right? And some people like to go like diagonal, doing from particular months, right? So let me explain. So we know in January we're collecting 30% of January, right? In February, we're also collecting 50% of January. And in the final month, sorry, in March, we're collecting 18% of January, right? So some people like to do it that way, where they take 1 month sales and track that in, well, for however long it's going to be collected, right? So you can do the same for February. You can say, okay, cool, I'm going to take 30% of that and then 50% here. And then, well, I'm not doing it for March. I'm sorry, I'm not going past March. So I'm not going to be recording the last collection for February. In March, all I'm going to show here is I'm going to show the 30% of March, right? Now, of course, we have some blanks to fill in. In February, right, we are going to be collecting 50%. 50% of, sorry, not 50%, my bad. That was January, right? So 0.8, so 18% of December, right? Because December was 2 months prior, and the 2 months is 18%, right? And then also, well, we collected 50% here, my bad. 50% of sales from any given month is collected in the month after the sale. The month after December is January. We're going to be collecting 50% of December's receivables in January. And then the last one would be the 18% of November. Cool. And then we just total that up right here. All right, 145, 5, 162, 5, 147, 5. So let's zoom into that a little bit more. All right. Okay, so can I get a G? If you guys are good with that, please and thanks. If you need me to re-explain, give me an R, please and thanks. Right? And again, you don't have to show these things here. I'm just showing that for my formulas to pull from, right? But when you guys doing it, you don't show those, right? Now, if you do, it's not a problem. You're not going to lose marks, right? You're just not going to get any extra marks for it. But preferably don't show those, right? You could keep it in your calculator or do it on scrap somewhere, whatever the case is. But, right, my advice is, yeah, don't show those. Get to me. Yeah. Is it me or I? Okay, so 11 out of 15 a little better. It's almost 12 out of 15, which is 80%. So I'm okay. But the next 20%, next 3 of you all, let me know what's going on, right? If it is you're having trouble or you're just waiting on me or you're born. Okay, cool. So that's that piece there. Nice. Send that in the chat because we're going to be pulling from this cash budget, right? All right, the next piece. Okay, so we have a purchases budget to do. Let's zoom in there. Let's zoom out a little bit. Right, so cost of goods sold is 60% of sales. Okay, so we need the sales figures. One sec. Yeah, I'll put back the sales for you all right. So sales, right? So we have 175, 160, 170, and we're going to need April. Right, so let's take a read here. So cost of goods sold is 60% of sales. Desired ending inventory is 20% of next month's sales, and inventory on hand at December 31st, 2010 is 35,000. Right, now what we're building to is the schedule of cash disbursements for purchases. But before we could do that, we need the purchases budget, right? So in case you don't remember the purchases budget, let's have a little recap of all those things still open. Shucks. Give me one sec. Where'd it go? Yeah. So in case you don't remember the purchase, oh no, that was from the week before. Wait, did I close all my files? I'm an idiot. Right. So the purchases. So you start again with your cost of goods sold. So we're not dealing in units, we're dealing in dollars, right? So you add your inventory and your closing stock. Right. That gives us the cost of goods available for sale, and you minus your opening inventory. That's going to give us the purchases. All right. So the cost of goods sold is 60% of sales. All right. The inventory is 20% the next month. Next month's sales. Next month's sales. You add those to get your cost of goods available. Right? And when you minus, right, that gives you cost of goods available, and then minus inventory at start, and that gives you the purchases figure. All right. A little Sahino. Neither one sounds good. I would go for the bacon track, but not today. Quite a bit of fried food this week, and I am not supposed to be eating all that rubbish, given my goals. But it was an off week, so we regroup and we start again. Right here. This up here is just the kind of the calculation for the purchases. Opening stock plus purchases minus closing cost of sales. So add back the closing minus the opening, you're good to go. Right. Anyhow, sure. I'm gonna give you guys a few minutes to populate that particular table. We'll correct it and then we'll go on to the one just below that. course, if anybody has any questions, please feel free to let me know. Send me a pic of your work. Let me see what's going on. If you have any issues. Ow. All right, cool. Um, right. So cost of goods sold is 60% of sales. Inventory at the end is 20% of next month's sales, right? Add that, get 137. And inventory at start is 35. Oh crap. Sorry, my bad. 102. All right, cool. So then we just repeat. February, 60% of sales is the cost of goods sold. Inventory at the end of that is 20% of next month's. Right, cool. The inventory at the start of Feb is the inventory at the end of Jan. And we just get 88, right. And then for, oh, sorry, hold on. Right, and then for March now, right, so again, 60% of the 72, we take 20% of that, we add those together, we bring down the 24, and then we add to 78. Okay, all right, so ladies and gents in Google Meet, just give me a quick G if you're good with that, please and thanks. All right, so that's 8 out of 14, so a little more than 50%, so a little less than 50% of you all giving me any feedback. All right, well, again, if you want to just message me privately, that's not a problem, you can do that too. Okay, so now we're going to do the payment schedule, the schedule of distributions. I'm missing something here, am I not? Yeah, hold on. Why is it not? All right, so your payment pattern is that. So you're paying for 40% of your purchases in the month, and then 60% in the following month. And your accounts payable at the end of December last year was 55.8. So that's going to be okay, cool. So what we'll do, let's just copy and paste this now. Right. Cool. So right, so organize that, and then we will go on to the actual full-fledged cash budget. Right? So we'll have some other items there as well. Press the no problems, that's fine. you guys a minute or so again. All right, so let's go. Of this, and then the accounts payable, the 55, it will go here. That's the purpose of that one. Right, then we're going to do that, and then we're going to do 60% of this item here, and total it up. Okay, and then just repeat 40% of that one, 60% of February, and then total. Okay, cool. So that is the payment, the disbursements for purchases for Fillmore, right? Okay. So, ladies and gents, in the drill, if you're good with that, give me a G in the chat, please and thanks. One more thing to go, but it's the biggest thing yet. Lots of moving pieces. Actually, no, I think I kind of oversaw it. All right, cool. 1, 2, 3, 4, 5. 5 out of 13. So, eat all, there's almost twice as many people who said it. All right. Okay. All right, guys. So, last piece. So we want to do the cash budget. This is the other information, right? Now remember, with the cash budget, we had total cash. So we had inflows, we had outflows, a subtotal for each, and then the net inflow or outflow. We also then had the opening balance in the very first month, giving us the closing balance, and then that was kind of carried forward, as the case may be, right? For Fillmore, right, so we have cash. The opening balance for January is 10,000, right? Now we have an expected purchase of equipment in Jan 2011, 15. 40 apparently was paid already. So if 40 was paid already, 60% left to be paid, right? Dividends in January, 30,000. Admin expense paid per month, right? 40. Mortgage payment in January, 5,000. Selling expense is 5% of sales in the current month to be paid in the month. So you have to find 5% of sales. Interest expense payable. So January is full, boy. January have plenty outflows. All right, cool. Interest expense payable in January. Right. Okay, cool. The company has okay, so this is the part here we didn't talk about yet. So don't worry about this yet. What I want you to do is I want you to do the cash budget based on the inflows, these outflows as well, and these outflows here. All right. So that's the opening balance. So you know where to put that, right? So you have the equipment purchase in January, dividends in January, mortgage payment. Now, of course, the admin is supposed to be there, selling expense and interest, right? But there, so the interest, the mortgage, dividends, and the purchase of equipment, the remainder, all those are exclusively January. So yeah, we're doing those. So you're doing them, and again, you're kind of ignoring this part down here. I'll show you what to do with that part. Give you about 10 minutes, and then I'll need 5 to go through the loan part or the borrowings part. Right? And yeah, we will be spending one more day on budgets to kind of clear up a little more. I have some questions and stuff down here that we're going to do next time. Give you a few minutes again. Time? No problem. Yeah, I can give you 5 minutes again. That's not a problem. Oh, sorry. That's a T since that's supposed to be a R. Sorry, I don't know how I'm now saying that. Sorry about that. Let me know now if you have something. You want to go back to the disbursement schedule for. It's not a problem. I can do that. I'll picture this in the chat so that they can check it out. Huh. Yes, I'm making a quick call. That's a very interesting question and an interesting answer. I wouldn't be here when you get in because I have to go home. So I'll leave the audio off. So just push it in and I'll pass on later on. All right. And I'll see if I can sort out the Instagram post flyer thing for you either there. If not this weekend, early in the week. Okay. Yeah, yeah, I saw that one. Yeah. All right, cool. All right, later. Thanks. All right. So, right. So, the person asked me if I have any mark schemes, and I said no. Cape doesn't distribute them. They don't put them out. They said their teacher has all. So I just called my teacher, who has also marked Cape. He says it is a very big violation to leave the examination center or distribute the mark schemes. Like it's like supposedly having any past papers is not is even that is bad, but that's just how it's go. The mark scheme, totally different story. It's like way higher up on the totem pole of violations and haven't passed papers. So if your teacher has, that's very interesting. They don't distribute them readily. Like I said, this exam body likes to think it's a professional exam body, and it's better than Cambridge. But Cambridge gives out their mark schemes. They have a script return policy where you could give back your script. So yeah, and also Cambridge doesn't have SBAs and IAs bogging things down and causing problems. Anyhow, let's tackle this, shall we? And forget the rubbish of Cape. Well, we can't forget it because we do in the Cape the thing here, right? Okay. Pull that up. Okay, so like I was saying, right? So the inflows, so cash collected sales or receivables, right? So we had that across here, right? So we're just gonna copy and paste that here, right? We'll take a little total. Actually, why not? Right, total cash collected, total cash inflow, right? Outflows. Cash disbursements for inventory, right? That's the piece here, right? So hopefully you have at least those two things going, right? Okay, now we said we have this purchase of equipment. We have some items that are January alone, so purchase of equipment. 40% was paid, so 30% of 50 is 10% is that, so that's 2/5 is, oh yeah, so 30,000, right? Sorry. Purchase of equipment, dividends, sorry, 30,000 as well. Admin expenses, paid per month, 40,000, right? Mortgage payment, 5,000. Selling expenses, right? So that's supposed to be 5% of sales, right? Okay, where's the sales figures? Okay. $750, 8,000, and then right. So you have zeros there, zeros there. Admin. Okay, so admin is 40 per month, right? The mortgage payment, right? You have no mortgage payments in February and March. Right. Okay, cool. So we have an interest, right? Interest pay. 1,000. That's January. Okay. So with that information now, and sorry, and the opening balance was what, 10,000 at the very top right hand side there. Okay, cool. Now, sorry. Total cash outflows. All right. So net cash inflow slash balance at start was 10,000. Balance at end. What's this here? Oops, sorry. So we have net negatives right through, right? And that's where this other piece would have come into play. But this is an old question. This is like 2011, right? I haven't seen them bring stuff like that since. I haven't. It's very, very rare to bring that. But I think if I try to explain it now, it'll be too rushed. I'm sorry. So check 40% of 50,000. Right. So what I was saying. Okay. Sorry. I understand why you're asking me now. Right. Now it says 40% of this was paid. So to me, if it was paid, that means it was paid before, right? So you expect to purchase this in January, and 40%. Now, if it is that you interpret it differently and you put the 20,000 here, right? Then that's what it would look like, right? But my interpretation is that if they said that 40% was paid, it means that the 60% is left to be paid in January. Right. So, but I'll let that one slide for now. All right. Okay. Right. So when we come back next week, it'll be the last week on budgets, right? And again, do for oh wait, I closed off the file. 1 second. Give me 1 sec. Sorry. Again, this one I'm just kind of not syllabuses. Sorry. Roll call. Right. So again, we're here, right? So this week is basically done. Next week is the last week of school. We'll have class as per usual. The following 2 weeks thereafter, we'll have class on Tuesday and Thursday 4 to 6. If you all could make it, if you all can't make it, let me know. I'll send a poll. Let me know early, right? I'll see how else we could shift it, but I don't really see anywhere else we can, right? Maybe we could keep it on Saturdays, but we'll see, right? Yeah, so we'll end up getting 6 sessions in April, right? And again, I'm gonna see if maybe I could remove this POA crash. This is a second POA crash course. I don't even know that's gonna happen. Right, the first one might probably be enough for me because anyhow, yeah. So I might try and do a keep unit 2 one here. Again, it'll straddle April and May, so I might have to put it all in May, right? And now in that case, I get 8 sessions. But then what we're gonna do? Because if I didn't finish the syllabus with you all, I have to do that, right? Yeah, because as you can see, all exam is on a Friday and it clashes with the maths. And yeah, I'm not trying to say I prefer them over y'all, but again, with the Caribbean exam here, some of y'all are not gonna come Monday, and with the com here, some of y'all are not gonna come Wednesday, right? And then with the maths people, yeah, I need to jam them with some maths before the exam on Friday. So again, we could figure it out. I'm open to suggestions. Anyhow, folks, that's about it for today. If you guys have any questions, you didn't get to ask in the course of class, please feel free to message me. Other than that, have a good weekend, have a good week, and I'll see you all next time. Bye. Bye, sir. All right, guys. All right, guys. Take care. All right, later.